Hi there, welcome to kneppyinvests. It is said that turnaround stories seldom turn around, and I have found over time that's not entirely true. You can find some really good turnaround stories on the stock market, in particular commodity-driven companies. Now, to be fair, a lot of potential turnaround stories never do turn around. They keep on falling, and those companies eventually might go bankrupt, and that's just the cyclical nature of a business. So I think it's very important not to get too hyped up about a company's share price that has fallen or not and jump too early and buy into that company, because the share price could keep on falling. So what I usually do is I have a watch list, and there's about 75 to 100 companies on this particular watch list. And fun enough, I've called this watch list the turnaround watch list. And what I'm doing is just looking at the share price, and I'm waiting for an opportunity to buy the company's shares in the future if the company's share price and the company itself turns around. And I want to be a little bit patient when I'm looking at the turnaround story for these companies. So in this particular video, I'm going to be featuring 5 companies, and quite a few of these companies I do feature a lot in my videos. For the companies very close to turning around, or maybe one not so close, it is still going through some issues. But there is one company, and I'll feature this company last in this video, that I think could be very close to a buy right now. So let's get stuck into it. And the first company we're looking at is Zoono. This is the company I've been following ever since October 2019. So this was a company who saw their share price break out before COVID-19. And in fact, by the end of 2019, the share price of Zoono was significantly higher than it is now. But Zoono did have some significant tailwinds behind it during 2020, but those tailwinds came to an end around about August to October of 2020. And the share price of Zoono has been in a well-defined downtrend for or over the past 18 months, ever since the share price was above $2. So in this particular chart, and the charts I'll be showing you in the next 4 slides, I do have 2 moving averages on these charts, the 50 to 100-day moving average. And more than likely, in all these videos, the 50-day moving average will be on the bottom of the 100-day moving average. In the simplest terms, that is the definition of a company in a downtrend. I've also shown you 2 other features in these charts. There is a red star, and the red stars are pointing out false breakouts in the company's share price. And I've also have a horizontal black line, and that horizontal black line is an area of support for the company's shares. Sometimes you'll see that area support last a fair while. For example, Zoono here, between April and September, we had an area support around 60 cents. And the share price touched 60 cents about 2 times before it fell through it towards the end of August. And right now, Zoono's share price is right on an area of support at 35 cents. So the share price has been falling for quite a while with this company. And the market cap currently for Zoono is around $55 million. They have about $7 million of cash, which means enterprise value is around $48 million. Now, this company was operational cash flow positive in the most previous September quarter. They have yet to release their Appendix 4C for the December quarter. And in my opinion, because they've left it to the last minute, there is a chance this might not be as good as a quarterly report than we've seen in the past, particularly the September quarter. And that could mean the share price could slip below that support at 35 cents. But again, we can be patient with buying into these possible turnaround stories. If it's actually a good Appendix 4C, we might see the share price pop up, but because there's still a fair bit of resistance moving forward, I think the share price of Zoono will struggle. And we saw that in April of this year. We saw the share price rise about 50% in one day on some good news. But because we had seen share price higher over the previous 3 to 6 months, there was a lot of resistance moving forward, and that potential breakout failed. We saw another potential breakout in July that failed, and then one again at the start of January of this year. and that failed. And all these occasions when this breakout's failed, the breakout failed when the share price reached the 100-day moving average. And that means the share price keeps falling, the moving averages keep falling until we see signs that the share price is moving back into an uptrend, until we see signs that the sentiment has shifted in this company. We can remain patient and just wait for a bit of a golden cross, and that golden cross I'll be waiting for is that 50-day moving average to move above the 100-day moving average. And up until then, we can just remain patient because we don't know how much further the share price could fall from here. So again, if the company does release a negative Appendix 4C, we might see the support level at 35 cents be broken and the share price could keep falling. But the reason I'm following Zoono quite closely is just the valuation around this company right now. I do think it is lower than it should be. So this negative sentiment in the company has driven the share price lower than the value I would attribute to this company. And the other way to look at this is if you go back to pre-COVID in, say, December 2019, the share price of this company was in the 60 to 70 cent range. So it is half from what it was back then. And this just shows you the power of negative sentiment. On to Appen, and I have been a shareholder of Appen in the past. In fact, I held these shares for about 3 or 4 years as the share price kept on increasing. But the shares of Appen came under pressure towards about August 2020. Share price reached a high of something like $45. And then the share price of Appen moved into a downtrend towards about November of last year. Share price was above $30 at that point in time. And the share price has kept on falling ever since then. We've seen three levels of support be broken. One around about $22, another one around $15, and the next one around $11. And the current support level is around about $8.25. That was the most recent low back in October of last year. Share price does look like it could be moving into a consolidation period, but still, when you look at the moving averages, the 100-day moving average is still above the 50-day moving average. Tell us the share price is still in a downtrend. And we have seen quite a few false breakouts with Appen. And I think the reason we've seen false breakouts with this company's share price is as the shares of this company keep falling, a lot of value investors see potential value in this company. And that's why we do see the share price goes on runs every now and again. And the most recent run pushed the share price above $11, which was the old support level. So you could say maybe that support level, which became resistance, was broken. But at this point in time, I'm just looking at the moving averages, and I want to see that support level at $8.25 remain intact. And then I want to see the company release some good news, because ultimately, the most powerful sort of way you get sentiment to shift in the company is some positive financial news from said company. And we can, just like with Zoono, we can remain patient until that time happens, because again, just like Zoono, we don't know how low the share price can fall from here. Now to a company I actually do own, and I've learned a lot from this company, A2 Milk, because I was a shareholder of A2 Milk for a long time. It was a 10-bagger for me at one point in time, and even though I did get some signals the company share price had moved into a downtrend, I did not sell just simply because of tax reasons. So I was sitting on a large profit and I just didn't want to pay tax. So I have learned my lesson with A2 Milk. And when you do see a share price of a company move into a downtrend, it just increases the possibility of some bad financial news in the future. And that definitely happened with A2 Milk. In fact, they released 4 profit downgrades over about a 6 to 9 month period. And the share price fell from about $20 at its top in July 2020 to a low of around about or just above $5, which was reached in May of last year. But there are some good news when you look at A2 Milk share price. We are possibly seeing this company's shares move into a consolidation period, and ideally or technically, the best definition of a consolidation period is when you see the moving averages going sideways and a lump together. We haven't quite got that with A2 Milk yet, but we've seen the share price reach a high of $7.50 twice and then pull back. And whenever the share price reaches about $5 and I think about 20 cents or 10 cents, the share price then rebounds. We've seen that happen twice in the past, and recently, about 3 or 4 trading days ago from when I'm doing this video, the share price of A2 Milk briefly fell below that support level at about $5.10. But the next day there was significant buying and the share price rose 8% on no news, even though the overall market was down a lot. And the reason I think the market became really interested in A2 Milk on that day was simply because of that support level at $5 and about 10 cents or so. So that was a bullish move when it came to A2 Milk, and that meant that support level at $5.20 or $5.10, I forget exactly what it is, was a fairly powerful and strong support level, and that would have been a good time to take a position. But just like every other company that I'll be featuring in this video, we're still seeing the share price in a downtrend, because if you look at those moving averages, they're still going down, and the longer term moving average is still above the shorter term moving average. But if we do see a share price increase from here to back to that's resistance level at $7.50, that would mean that more than likely the downtrend in this company has come to a completion, and I'd probably say we're in a consolidation period. Now, to another company that I actually do own in my long-term portfolio, and I just thought I'll just take a position in Kogan because I'm not sure what the share price is going to do. So I bought this during a period between, I forget exactly when it was, but there was a period between about May and November of last year, and the share price was going sideways. You can see the share price of Kogan reached a low of about $8.50 in May last year, and the share price wanted to go back up, but that support level at $8.50 was broken in November of last year, and the share price has fallen by a fair bit since then. So even though the share price looked like it wanted to break out about 3 times during that 6-month period, once in June, again in August, and then again in October, all 3 times when the share price wanted to break out, it failed. And all 3 times, the share price just moved above the 100-day moving average for a brief period of time and then fell back because there was a lot of selling coming in, and that's why those potential breakouts failed. And then we have seen some bad news recently. They did do a trading update, and we did see the share price take a hit, and the most recent support at around $7.25 was broken. The current share price of Kogan is $6.11. And I have to be honest with you, Kogan at $6.11 is really attractive when you look at the valuation of this company. But again, a lot of negative sentiment behind this company, and it wouldn't surprise me to see the share price fall even further from here, even though I do think there is really attractive value when it comes to Kogan. And that's one of the reasons I do own this in my long-term portfolio, because I do think there is a lot of potential. The share price of this company in 5 years will be significantly higher than it is right now. Now onto the company which I think is a potential buy and has been a potential buy for maybe the last month and a half, and that is AGL, potentially one of the most unliked companies on the ASX over a 2-year period. And this particular chart goes from February 2020 up until February or late January 2022. So it's a 2-year period. And during this 2-year period, the share price of AGL has fallen from $21 to a low of $5.25. Now, this does go back to just prior to the COVID-19 panic, and the share price, just like every other company, fell during that panic to $15.50. But unlike many other companies on the ASX, the recovery in AGL's share price was quite tepid, quite weak. And in fact, the share price didn't increase all that much. In fact, it went from $15.50 to about $18, and it didn't take very long for the COVID-19 panic lows to be broken. For AGL, that was only about a 5-month period. It was broken in August of 2020 at $15.50, and that's moved the AGL share price in a well-defined downtrend. And it keeps on falling, even though we do see potential breakouts. In fact, we saw a potential breakout in November 20, March 21, and again in June 21. And those potential breakouts failed because there was a lack of conviction a lack of volume. And whenever you see a share price rising like this on no volume, that means there's no support in that dead cat bounce. So I'll call those potential breakouts dead cat bounces, but simply because there was no volume. And in all false breakouts, we did see share price move back in between the 50 and 100-day moving average, and that was the time to sell into the rally. And every single time we have seen a little bit of support when the share price gets to a low, that support is broken within a 2 to 3 month period. We saw that in just when we saw those rallies in November, March, and June of the last 2 years. Now, the most recent low we did see, and it was twin lows in September and November of last year. The first low in September was met with increased volume. So that is telling me there was some possible institutional interest in AGL at that point in time. A lot of institutional people, analysts, saw the share price get to about $5.25 and thought there was value in AGL at that point in time. So that was a potential good time to take a position when you see an increase in volume when the share price gets to a low. That low, that support level was tested for about a 2 to 3 week period, late November into the start of December. Then we saw a massive spike in volume. It was only a 1-day spike, but that was telling that there was potential, some really strong institutional support for AGL at that point in time. And then we've seen the share price of AGL go on about a one and a half month rally, pushing the share price from $5.25 to a current share price of $7.06. So a really good rally with AGL share price over the past month and a half. And maybe more importantly, we've started to see the moving averages trend upwards, and the 50-day moving average looks like it might be crossing past the 100-day moving average, which would be a golden cross for me. If the share price moves above $7.50, that would be a bullish move with AGL. And I think what we've seen the share price over the past week, when we've seen overall negative sentiment in the overall market, is telling there is a bit of strength with AGL right now. So this is a potential buy for me at this point in time. That's all I have for this turnaround or potential turnaround stories for 5 companies on the ASX. At this point in time, I'd say 4 of these companies, it might be wise to be patient. Just wait for confirmation that the turnaround is coming to fruition. For AGL, I think there is potential that the turnaround is happening as we speak. And even though the share price has increased from about $5.25 at the most recent low back in late November, early December, and has risen to about or just above $7, we could be seeing a turnaround in AGL, a shift in sentiment from highly negative to potentially positive. And there are reasons behind that, which I won't get into in this video. If you do have any questions about any of these companies that I have featured in this video, just leave a comment, question, or anything in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.